when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. It is approximately 10:30 a.m. in Honolulu, Hawaii. It is Friday the 13th, May the 13th, and this is the daily report for gold. We do have gold currently trading down under pressure today. It's trading off about $12 to $13 at $14.93. $14.94. We are looking at a 120-minute candlestick chart. Each candle represents 2 hours of trading. And currently, as you can see, we are just coming off of these lows. Before I talk about what I'm really looking for next week, I want to take a look at what clearly pops out in my mind when I look at this 120-minute chart. And that is, as we went into our correction, of course, we had our record top back up here. It's almost a double top, in which I believe we hit 1577 as a new record high. We hit our first corrective wave. We hit our B wave here. And as you can see, this marketplace itself has been consolidating in such that when you take a look, for example, at these last three lows that we've gotten right here, which happened on May the 5th, then the market comes up, trails down. It does make a higher low, and then this last low that we had last night, again, is yet a higher low. Now, when we take a look at the tops that we have hit, of course, we have our highs right here, our record tops. Then when we look at the next set of tops right in here, and that is a lower high. When we look here, we have a lower high, and here we have a lower high. So what is significant? What is significant to me is that when you take a look and you begin to realize that you've got a series on the support line, a series of higher lows. And at the same time, when you look in the resistance areas, you've got a series of lower highs. That forms that classic pennant formation itself. Now, as you can see, what we are looking at in this marketplace itself, I believe, could be best construed now in terms of the type of correction is it's quite possibly what we call a triangle. You notice that I've just put up the original scan. This is out of R.N. Elliott's classic masterwork. So this is his work itself. And he talks about these corrections, triangles. Triangles are composed of 5 waves, or better said, 5 legs. In the larger type, each leg will be composed of 3 waves, as shown in figures 31 and 32. We want to look obviously at figure 31 because this is the correction of an uptrend. So when we look at that, the way that he goes ahead and labels it, and we're following just classic Elliott wave textbooks here, is that as this market came up here, you get these corrective waves, and the way he does his count is this is wave 1, and then we have wave 2, and then we have wave 3, and then 4, and then 5. His belief is on the 5th wave here, you have concluded the correction itself, and then, according to the theory, this is going to be the thrust line. And as the thrust line, this will be the end of the correction. And as the end of the correction, we will then go back into our impulse phase. When I look at these original illustrations from R.N. Elliott and I compare them to the chart that I'm looking at right now, our gold chart, I think that we can see that it's quite plausible that in fact what we are looking at currently is this type of correction. We have gone back to our daily chart, and one thing that is worth noting that your corrective waves 2 and 4 many times do end up panning out as this type of a triangle, or what I call a wedge correction. We're looking at our daily chart so that we can kind of put that all into perspective. If in fact that is what we're looking at, And as you can see, as this market came down and hit this low, our series of course, higher lows and lower highs, the other thing that I'm noticing is that we are resting right at a channel line that I think is going to be something that we would like to see if it can hold. The market right now is about to close. It looks like it's going to close approximately $12 down on the day, so it's certainly given back a little bit, but my sentiment is this week has been tricky, to say the least. This is not an easy market to call. It's not an easy market in terms of a technician or someone who's simply trading the fundamentals in the market. Gold, silver, the precious metals complex as a whole has been in a volatile stage, not only on the upside, but on the downside. We will have to see if that formation itself proves to have some merit over the next week itself. Of course, we are in at 1488. We will maintain that position. Once we receive very strong confirmation that we are in fact out of our corrective phase and back into our impulse phase, we will look to scale and add a position or add to this position so that if we go into a nice impulse wave 1, we can look to profit from that move. This has been Gary Wagner wishing you as always good trading, and we'll talk to you on Sunday for another daily update. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange